morning, everyone. Welcome to the European crossover webinar. Sorry for the delay. I was just getting my coffee ready, so apologize. Okay, we did go in and hit some key levels yesterday. We did see the yen going drop down here. Sort of took that dip. And that was right after we had that big, the break finally to the upside. But we dipped. We did come in right into our bias chart support here. You saw here on the dollar yen we had 1136, and that's where they ran to. Actually, the low was 1138, so I guess off by a couple of pips. As well as our on the cable too, we were looking for a dip down here, 2868. I even posted that when we were hitting that area here. I don't know if anybody was in the cable, was able to cover some of the shorts, although we didn't rally that much. But the low was 2866, and we're looking for 2868. Dollar Swiss is still holding up here. I know some people are trying to take the short. Now, I even caught a little bit, but I'll tell you what, here's my problem here that I didn't like. Let me show you this. I had some concerns on this. Okay, we came this high up here. I myself caught it right. I got very, very fortunate, caught it right here at the top before, and I already jumped out. But I talked about 1/3 here, 1/3, and the last third around 885 or 101.85. So we had this jump back up. One of the things I saw yesterday, and I did catch a little bit of short, but I didn't hang on for too long. I'm glad I didn't. Was look, you see this 2-hour bar? That's the highest close. You see, it may not have been the highest price, but that close took out all these other closes down here. Previous to that, the highest close was 216. So we got this jump up here. Look at that. That was up to 223. Now we did slide, but we didn't slide that much. And look at us, we're at 0205. So I said, you know what? I thought we'd go and push a little bit low, but I thought, you know what? I'm not going to push it too much. I mean, if I end up covering and it falls further than I thought, and I covered it 0202. But I was really concerned about this. I'm thinking, it's above this high, is above all these other highs, and I was even wondering if it could even go a whole lot further. So that's one of my concerns here on the dollar Swiss. Obviously, today we have, a moment. We have a GDP, US GDP. Previous was 2.2. They're looking for Reuters poll is 2%. And then that's about it, because we do have University of Michigan, but it's final. So that won't move the market a whole lot. It's not like as if it's a fresh number. It's the final reading for University of Michigan. Last was 96.9. Looking for 97. The euro, we were looking for 11.26. We got as low as what? 11.18. So we dip past that. But once again, that was my little stretch area here. We could have bounced maybe a little bit further, but like I said, the dollar is still holding up very, very well. You did see the dollar CAD come back just a little bit, not really a whole lot, but we mentioned that 35.20 level before. Right now, the key level here on the dollar index would be that 97.89. Remember, that's that key weekly level, which is also the 61% of the entire move. We'll go and take a quick look on that. So this dollar Swiss, you can still make another little pop up in here. on that GDP. There's that key 97.89, and we'll look at it on the weekly. And we talked about this. This is even key on a monthly. So it'll be interesting to see if we can hold above this 97.89. I guess this one's a big story. It's just like I said, this is dollar yen. I've been yapping about this thing was a big disappointment. I thought this was just the most ridiculous thing. Well, maybe not the most ridiculous thing. The most ridiculous thing is this U.S.-China talk. Some people waiting for that U.S.-China talk. But as I mentioned, it had the opportunities to do something and never did do anything. And finally, they really knocked them down all the way to that 1136. So much for all that jazz about 113, 114, and maybe 115. Let's just go and move on to the news with the morning bid. I don't really care about this politics stuff, but as far as the Spanish Catalonian, general elections often revolve around the economy and voter calculations and about which party is best for their pockets. Spain votes on Sunday is being played out on the broader terrain. Now, the only reason I mention this one because most of the stuff I could care less about the yellow jackets and the pink jackets and the gray jackets of Emmanuel Macron. The only reason I'm putting this one here on the Catalonia is because it's independence. Depending on how that election comes, it could, might weigh on the euro at the start on Sunday. So Spain's vote on Sunday is being played out on the broad terrain. The simmering row over Catalonia's independence aspirations is one of the battle lines, with some voters seeing this as a threat to Spain's very existence. So we'll have to see how these elections play out. Just keep your peepers up on that. Depending on how this plays out, you could find the euro under pressure at the start of next week, possibly. Anyway, all this other stuff I could care less when it comes to this politic junk. Okay, move on to the markets. All eyes are now on the US GDP numbers, which would either knock the dollar off its pedestal or send it to zipping even higher. Consensus is for 2%, but some estimates put Q1 growth as high as 2.7%, which would leave the rest of the developed world trailing far behind. No wonder the dollar is zooming up against the rivals, gained 0.8% so far this week. The euro, which is off around 1% for the week at 11.33, could well test the 110 if the GDP surpasses expectations. While emerging markets must brace for a torrid time, against a basket of currencies, the dollar was 0.8% firmer for the week at 98.14, having touched its highest since May 2017. The dollar index, which would have been higher if it not were for investors buying yen to guard against any liquidity flash crashes over Japan's coming 10-day holiday, the one on January 10th has seen the yen shoot massively higher in a matter of minutes. As a result, the yen has risen against most currencies this week, though possibly not as much as one would have expected given all the stories of panic yen buying that are all out there. But back to growth and central banks. If the U.S. growth surprises to the upside, its position as an outlier in the developed world would be confirmed. We've heard in recent days from policymakers in Sweden, Japan, Canada, New Zealand, and have sounded dovish on the future interest rate paths. And ECB Vice President Luis de Guindos hinted at being open to more money printing if the Eurozone malaise doesn't lift. After recent iPhone and last week's flash PMIs, his comments don't look surprising. Bond yields with Macron and his problems could care less. German yields are below 1%. Italy investors are jittery about credit ratings. Well, these are important. But like I said, this stuff with France just don't even want to read anything about politics. European shares are opening marginally higher, and world shares, despite flatlining in recent days, look set, at least for now, for a fifth week of gains. Let's see here. That looks like be about it. And on to the dollar. The dollar held steady close to a two-year high against its peers on Friday, supported by data showing strong U.S. capital goods while a first quarter GDP report to be released in the global day later in the global day could further reinforce bullishness. Data on Thursday showed new orders for U.S.-made capital goods increased by the most in 8 months in March. That follows other recent U.S. data that shows strength in retail sales and exports. According to Reuters survey of economists, data to be released at 12:30 on GMT will probably be showing an increase of 2% on year in the first quarter, slightly lower than the 2.2. We expect GDP data to underline steady economic recovery, said Shin Kendota. Differences in economic fundamentals is a key driver for currencies now that the Fed and more recently Swedish and Japanese central banks adopted a dovish stance. Sweden's central bank said on Thursday recent weak inflationary pressures meant an interest rate hike would come slightly later than had it planned. It had moved to dispel any doubts over its commitment to ultra-loose policies. The BOJ on Thursday put a time frame on its forward guidance for the first time by telling investors it would keep interest rates at super low levels for at least one more year. Well, you know what? That keeps kicking the can down the road further and further. I don't think that road is ever going to go an end when it comes to the Bank of Japan. The greenback has poked above 112 several times this month without building any strong enough foothold above the threshold, while the dollar has been caught in a narrow range against the yen. Through most of April, Mitsumi, chief strategist at Daiwa, said Chinese PMI and U.S. non-farm payrolls jobs reports are due over the next week, and both are expected to be quite good. There's also the next round of U.S.-China talks, which could further lift risk sentiment. Yumi said the market could also see significant risk on during the Japanese holidays, pushing the dollar yen towards 113 yen. Trade Representative Robert Litzinger and Treasury Secretary Mnuchin will travel to Beijing for trade talks beginning on April 30th. If this was at the end, they wouldn't be traveling there for the trade talks, okay? If this is at the end, I'm not saying eventually, like I said, maybe it'll be the end of summer, maybe the first part of fall. That might be a bit of an exaggeration, but I'm just saying they wouldn't be going there if it was like this is going to be announced in the next week or 2 weeks. Larry Kudlow, White House economic advisor, said this week that the talks were making progress, and he was cautiously optimistic. There you go, cautiously optimistic. That means that the deal's not coming next week or the next 2 weeks. Starting on Saturday, Japan embarks on its 10-day public holiday to mark the abdication of the emperor, who was replaced by his son. And usually that's all we'll cover, but I just want to hit this is because the U.S. Trade Summit, Japan is resisting increasing U.S. pressure to link trade with currency issues as leaders of the two close allies are set to hold a summit in Washington Friday with trade and North Korea high on the agenda. Trump has made it clear he's unhappy with Japan's trade surplus with the U.S., much of it from auto exports, and he wants a two-way deal to fix it. Trump and Abe agreed last September to start trade talks on an arrangement that protects Japanese automakers. Treasury Secretary Mnuchin also said that future trade deals include one with Japan and U.S., which would include a provision to deter forex manipulation. So once again, they're already kind of resisting this pressure. We'll have to see whether this has any, we could see some good volatility potentially this next week with the yen, but we'll see what plays out. So let's go and move into the analysis. So looking at the euro, we have it for 11.26. The market did hold. Well, we do have GDP, a strong GDP could knock this even lower. Let's go and take a look here. Well, the thought would be is if we were to try and push it even lower, you'd want to take out that 111 handle. So what could we see if we got a strong GDP? And you see right there, right there. That's 1082. 1082. If we get the strong GDP, then that's where it would be. I'm going to put 1082. That's not where I would think. I mean, I would think, but they'll want to trip 111, and if they do, then that's where they'd want to go on and shoot for. Nobody would want to stand in the way initially. So we'd go with that at 1082. Resistance, initially 1160, but if the GDP were not to come in as strong, let's take a look at a little, maybe a fib. I mean, you don't like to use a fib unless you actually feel you have a low in place, because we could quickly dip down here. Let's try something else. That would be resistance. 1160. That's not even that far. That would be first blush though, because even if we get the GDP is not as strong, anyone who plays it to the upside, that'll be your first pause. Let's just go just a hair above it, and we'll call it 1170. Move into the cable. Okay, we talked about this. We even had this our Asian analysis at the beginning of the week. And just to recap, we talked about the significance of 2980 as a pivot. Okay. And we've gone below it. We said that if we got down to uh, if we broke this, we were looking for initial support at 29.16. That held, I think we took it out by 1 pip and we saw a bounce. Okay. And then for yesterday, we put it at 28.68 with 28.76 being this 50%. We took that out by what? 2 pips or 3 pips. I don't know what. Saw a little bit of a bounce. But we said if we got a weekly close below the pivot, then we were going to take this range. You see that? I'm not doing from very top to bottom, but just to 2982, basically this area here, we have the touches here. And then we're going to flip that and you extend that. And that gets us down to 26.16. So I think that's where we'll end up going potentially. I mean, if this dollar, well, here you go. Because look, if the GDP were not to be as strong and they come back, well, they're going to try and come back up towards this 2980. I don't see where the cable's going to have that kind of strength. But I'm saying the key is if they can get a close below the 2980 for a weekly close, that really opens the door for us to move lower. And this cable really has had a tough time. You would think that anybody that's been long and they say, well, I'll still hold on, or I'm long from here, I'll hang on, they're probably going to have to throw in the towel around 28.34, or you probably hit a bevy of stops on this. If we get a daily close below that, and that will once again open us up to come down here potentially to 26.18. So we'll see what happens. The resistance, oh, that's pretty clear as a bell. It's going to be 29.80. Support, oh, we're pretty well beat up here. unless the dollar takes off, which would be here, but I'll keep it simpler here and we'll just go right there with some touches. Actually, a little bit lower here. You see right there, that body right there? Right there. Actually, got to move this a little bit lower. There you go, right there. Which would put us at 28.25. And let's go into the Aussie dollar. Boy, this thing has been beat up so bad. I was posting in the room, the support we're getting on at this time with all the Aussie pairs. I was trying to post, comments. Hey, we're close to here. I think posted several charts in here. So we came down here. Look at that, 68.84. We had, and I mean 69.84, and that's what we went to, 69.84. The low was 69.87. So off by 3 pips on this one. It's why I mentioned yesterday why I go with the body touches. That's going to remain the same here, 69.84. And on the upside, let's take a look how much further we could go. Now you could actually look at a fib now, because that was a key support level and it moved off of that. So we could, although like I said, a strong GDP could knock us down there, but we'll look at the 2-hour chart. We'll take a look here with this one. %23 is at 70.40. Okay, you see right there, 70.50. I think we push beyond that. And this could be due a little bit of short, if I'm just saying, if the dollar were to pair back. Right there. Right there, 70.60. Because it could be due a little bit of short curve if that were to play out. Not necessarily suggesting it will. Poor Aussie's been so beat up, it's not funny. You could even make the case that if the dollar would pair back, we could easily come back up to 70.80. But for right now, it'll be 70.60. Call it 70.61. Move into the Kiwi. I had 65.74 off of this level here. And we got as low as 65.81. We'll keep that 65.74. The way held above, just above that, the same way the Aussie held above it, and resistance right there. You see the body touch? 66.90. Call 66.91. If we were to see this, at least you'd know where they'd be aiming for. At least we would believe where they'd be aiming for, but they took some longs off. And we'll go with the Kiwi yen. We had 73.63. Well, it missed it by 2 pips. Or actually a pip and 0.2. We'll move support to right there. You see the touches right there, so it'll be 73.84. And resistance, well, we'll take a look at the fib. See the 38% is 74.51 there? And you can see that we've got a pretty good level there, 74.40, but we'll give it some room. And that 74.51, you see right there, the 38% happens to be, you see this little body right there? Right there? Coincides with that there. So we'll call it 74.51. Which is also the 38% of that most recent range. Traders have short-term memory, so you can make the case, well, you need to be looking at, you need to be looking all the way back to here. Look, traders have short-term memories. So when you're bouncing here, they can be focused on this range. Doesn't mean that this range isn't important overall. What I'm saying is that's why sometimes you'll see me go and put, or I'll go with the confluence. If we're seeing something really major, whatever, I'll take the fib from here and also take the fib from the more significant high. But as I said, traders have short-term memories. I'll go into the dollar CAD. Well, we made a couple of stabs up in here, but we haven't made it up to that 35, 37 to 78%. Have dipped here. There's 35.66 right there. See that low touch? Well, 35.37 is a 78%, and we'll give it just a few extra pips. So we'll say it's going to be 35.42 if we get a good GDP. We had 35.37. Market hasn't quite made it there, but we'll give an extra couple of pips. Support on the downside. $34.53, which is a key number anyway on the way up. Right there's 57. But if we get if we see the GDP report coming just not as strong as they expect, right there, the little body touches right there. Let's call it 34.47. See it right there coming across. Boy, we got a pretty good little move in the peso. I caught a little bit on the short side, but I tell you what, I was really disappointed that I didn't hang on. Because this doggone thing really it just kept falling and falling and falling. And I sold it close to the top. And I was looking for this initial run to 15 okay, they may get down to about 13 and a half or so. And man, look at this thing. Down, 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 she felt. I posted in the room at the time that we had this support here at 1905. We had our bias chart support at 1906 and a half, and that's actually where they stopped. And then they bounced up, but then of course it eventually kept going down with the slide. I was really surprised the way this thing came off. See, look at that. We came down to 1906.4, and our support was 1906.5, and we rallied back up to 1912, and then we started a slow descent lower. Resistance will be right there, 1908.7. Support is going to be right there, 1898. Well, there's my 1136. That's where I came up with that. And you can see it basically got right down to it. It missed it by, what was it, a pip and a half or something like that. I think we're going to be stuck in a little bit of a range. I really don't see it pull, I'll probably stay around this area. But if it were to slide, what would they go to? Right there's 1128. So just move that a little bit lower. So what's going to happen, I would think, is then anybody who got caught short and said, "Oh, I knew this thing was breaking," and now they're like, "Oh, this thing's moving higher." They would use that dip down there to cover some of the shorts. Now, eventually, if these equities ever come down, yeah, that would open the door for us to move lower. But you've already knocked quite a few people out of the box. We jumped up, and we talked about that all from the beginning of the week. There's all kinds of, and from the previous week, there's all kinds of volume resistance between 12 and 1254. The market only made it up in here, and then we came back, and then we got whacked on the downside to a certain extent for those that were long. They knocked them out, and so I think we're going to stay pretty much close to home in here. But if they do, it'd be 1128, and then on the upside, right there, 1206. I think we had 1206 before. And we give it a little bit of room, 1216. Move it to 6. No changes here in the dollar. We're going to keep it 98.46, but if we get a strong GDP, they'll push them a little bit higher. Oh yeah, it actually should be 47, but let's see, just a bit higher. You see right here, right there, that body close, 98.71. I don't think it's going to do that. Look at this. You see right there? $98.72. That'd be one heck of a push there too, because we're already at 98.11 here. Let's just go with the 98. It's actually supposed to be 47. I think 46. So it's not gonna make that much of a difference, but still, I'd like to have it right there where it's supposed to be. So 98.47. But if we get all wacky crazy, look for 98.71. 98.71. I tell you what, we're gonna do this. There, no one gets caught with their pants down. Support, well, we know where that's at right now. This is 97.89. That's pretty close because you could make the case of this 97.70 97.78 right here. If we saw the dollar pair back, it's going to be this 97.78, but we know the significance of 97.89. The significance would be is if we close below that for the day, the week, that'd be rather interesting. I mean, it doesn't make it bearish, but it would question the upside then. It would question how much further can we go to the upside. So there'd be a lot of scrutiny next week. So, but we'll say it's 97.78. That's where you would see this market, some shorts starting to cover when those dip down there to 97.78. If the GDP were to come out a little bit, not on the strong as most would expect it. We'll move into gold. Well, I mean, we're coming off a pivot. I mean, I've been talking about this pivot for a while. As far as it coming down here, I thought gold still had the opportunity to continue to move higher. I think it was Steve, or it might have been Stellius, who was looking for lower prices, and a good call on their part, that it stayed lower. But once it broke lower and started heading lower, that's been my number, 1267. That was the pivot. You can see the significance of this pivot. You see that? If that's important, if that's not important, I don't know what is. If that's not a pivot, I'll eat my hat. Look at that. That's what I thought we'd see a good little bounce with this 1267. But when we had 1280, so support now, you can see all these touches coming across here. It's going to be right there. 1275 with resistance right there. These touches, if we can push a little bit for now, 1280, we'll call it 1288. 1288. 1275. Let's go into the crosses now. We had support here, it's 86.35. If we dip lower, it's right there. 86.20. 20. Right here. 86.50. Boy, that's not moving very much. We've seen most of the fireworks already on these yen pairs. Boy, this one really took a dip. Look, well beyond what we're looking at. So support's going to be right there in that level then. But boy, did they dip them. 24.20. It's going to be right there. 24.82. This is another one that, with the weakness of the euro, took a dip further than expected, but we're finding the support here. We're going to open the door for it to go a little bit lower, which would be, let's go right in there. 58.21. Resistance. Called right there at 58.80. We'll still keep it bullish for right now. We'll have to get a solid close blow here to flip it back to bearish. Actually, technically, we'll have to go back here to 58.08. But if we drop down here, we can say it's just in a range then. But we'll keep it, give it the benefit of the doubt for now. Euro Kiwi. Some good support here. We'll allow for same thing like the other one, allow for an extra little dip. But to right there, 67.31. Upside is 68.02. This one really shot. Remember, at the beginning of the week, we were talking about the break of this trend line, and then we would be looking for initially for 79.50, which you saw, and then beyond that 79. And boy, we just really took this thing apart. Here's the ranges that we've been in right here. I'm going to keep these ranges here anyway. We did dip below it, but it's going to stay within this range. At least that's what I'm saying for a bias chart, support and resistance. You can see it right there. 78.31. We did get as low as 78.12. And on the upper side, we're looking for 78.95 right there. Not even sure it can make it even up there, but we'll, let's see here. We'll stay with the 95. Boy, this one really. This is another one that took a dip, pretty good dip on that yen rally, and support right there, 44.11, and this one right down here actually got down at that low. Boy, that was huge right there. Support right now is going to be right there, right here, 43.98. Resistance. Let's go right there, 44.52. Resistance at this point is going to be 83.84. Support here is 83.25. Oh yeah, 24, that's fine. And lastly, the CAD yen. Support will be 82.62. Be 83.04. So the euro is just kind of hanging around here. Dollar index, it's just all about this GDP until then. And man, this peso, we said before at the beginning of the week, it would need to close. I think it's above 1911 something, or almost 1913, but it'd be at 19 above. I think it's 1911.5 or 9 or something like that in order to say, okay, it's bullish. Because anything on a daily close would still be a seller, but we really stopped out a lot of people on the way up. But then look how we just ended up giving it all back. Key for the dollar is that we close above this 97.89, that key big weekly level, which is also 61%. And we'll see how the GDP comes out. I'll get the buy chart posted, and thanks for joining us here on the European crossover webinar. Good luck trading.